Hello, and welcome to another episode of the Market Snapshot series. My name is Rupas Kamau, Markets Analyst at FX Pesa. So it's a new week, and we have quite a going on. So the key highlight is that there will be five top central banks that will be making an interested decision this week. We'll also be having three different inflation reports, and all these has the perfect conditions to move markets. So there will be a lot of trading opportunities this week, and today we choose to prepare for the week. So we'll take an overview of what to expect for the entire week, and once we cover that, we'll do technical analysis, try to understand where the markets have been headed, trying to understand the key or prevailing market structures. And once we cover that, then hopefully everyone will be able to approach the week from an informed perspective. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So hello, Francis Gachago. Hello, Richie. I can see Jack in the house. Thank you guys for joining, and also thank you for your responses. Good morning, Manabasto. Good morning, Rose. Thank you guys for your responses. So I would like to start with a disclaimer that this particular session is not investment advice. It does not represent a recommendation to trade. So it's purely educational. So always do your own due diligence. So hello, Geeky, FXKE. Can see Peter, Edwin, and A. Thank you guys for joining. So let's begin with the hottest news in the markets. And once we cover that, then we go through the other expected news in the markets. So I believe the hottest news in the market is about oil. Oil is the key data that is everyone is trying to question why is it moving up? Why are we seeing so much bullishness in the markets? So from what we can see here in this article by Reuters, oil prices build on last week's strength as supply risks rise. So we saw some good bullish momentum happening in oil last week. And as the markets have opened today, we are seeing a continuation of the same bullish momentum. And we'll try to understand why this is happening and try to speculate where it might be headed for the rest of the week. So as of this moment, oil is trading at $85.35 per barrel. So oil prices ticked up in Asian trade on Monday, that is this morning, extending gains from last week of nearly 4% on the view that supply was tightening, with the risks heightened by further attacks on Russian energy infrastructure. So last week we were dealing with this news where we had basically two drone strikes on two major oil rigs within Russia. And then over the weekend, there was an additional attack on Russian oil production. And as a result, we know that this will lead to lower oil supply in the markets. So Brent crude futures for May delivery claimed 47 cents. We also saw the US April contract for WTI being up 49 cents. And of course, the May delivery was up 50 cents, and this was this morning. So key points to focus on, and I want you to pay focus on this. The strikes on Russian refineries added $2 to $3 per barrel of risk premium to crude last week, which remains in place as we start this week, with more attacks over the weekend, said Vandana Hari, founder of oil market analysis provider Wanda Insights. So this is true across board. The attacks on Russian oil refineries is basically limiting oil supply and adding a premium to oil price, leading to higher oil prices. The second thing I want us to focus on is still on the same, and this is on the demand side. It's another article by Financial Times, and I'll share this. So China's industrial production jumps, and this was data on the economic calendar, and it happened earlier this morning. So if you go to the economic calendar and you look at data that came out at 5 a.m. today, industrial production in China came in at 7.0%, which was higher than the forecast of 5.3% and higher than the previous increase of 6.8%. So this was a big surprise in the market. Retail sales weakened to 5.5% from a previous number of 7.4%. Fixed asset investment was up 4.2%, higher than the expectation and the previous number of 3.0%. So key focus is on industrial production. So China is the world's biggest importer of oil. So if the economy is doing well, industrial production is increasing, then it translates to higher demand outlook for oil. So if China is slowing down, then it tends to slow down oil prices. And if it's doing well and industrial capacity is increasing as well as production, then it leads to higher demand for oil. So in this morning's data, the key summary is as follows. Industrial activity picked up at the start of the year in a boost for policymakers as they struggle to counter a 2-year property slowdown that continues to weigh on the world's second largest economy, China. So industrial production leapt 7% year-on-year in January and February. Combined data from the National Bureau of Statistics showed the fastest rate of growth in almost 2 years and above an anticipated 5% rise from economists polled by Reuters. Retail sales added 5.5% in line with expectations. So China's economic data is being closely watched for any signs of improved momentum after a period marked by deflation, low consumer confidence, and a property cash crunch that has spread to some of the country's most trusted developers in the past year. So clearly, we can see that a big jump in industrial production in China, combined with strikes on Russia's oil refineries, is leading to, on one side, lower supply of oil in the market and high demand of oil in the market. And this has the impact or the effect of having much higher oil prices. So I hope this makes sense for everyone, and it's more likely to be bullish for oil prices this week. So hello, Tony. Thank you for joining the session. You can see Manthi in the house. Apollo, welcome back. And hello, Brian. Thank you guys for joining the session. So we move on to the next part. And as I had mentioned, we have top central banks that are expected to report on earnings this week. So as we progress, if you have any questions, feel free to type that in the live comment section. And of course, I would really appreciate if you can like this video and share it with other trader communities. This includes either WhatsApp, Telegram, or Discord. So on the economic calendar, the key highlight for this week is just central banks making decisions on interest rates. So this will be happening first on tomorrow, very early in the morning, as we look at the Bank of Japan making an interest rate decision, where it's expected to hold interest rates at negative 0.10%. So second will be the Reserve Bank of Australia, which will be meeting at 6:30 a.m. tomorrow, and it's also expected to hold interest rates level at 4.35%. So third central bank will be on Wednesday, where the U.S. Federal Reserve, or the Federal Open Markets Committee of the U.S., will be meeting at 9 p.m. to make a decision on interest rates. And this is expected to be a level playing ground, meaning that we don't expect any change in interest rates. So the U.S. is expected to hold interest rates at 5.50%. Then later on in the week, we will be looking at Thursday at 11:30 a.m., where the Swiss National Bank is also expected to hold interest rates steady at 1.75%. So the last central bank to make an interest rate decision will be the Bank of England, where it's also expected to be holding interest rates at 5.25%. So with all these major central banks holding interest rates steady, the focus will not be on the decision they make, but rather the monetary policy statement as well as the press conference that follows later. So we know that when central banks make a decision on interest rates, they usually follow that with a press conference. And investors will be focused on understanding what is the future of monetary policy, how long it will take before these central banks start cutting interest rates. However, from the data that you've been seeing over the last 1 month on inflation, it shows that inflation is on the rise again, with the US inflation taking a key highlight last week by moving from 3.1% to 3.2%. So with inflation rising again, it makes it a very difficult conversation to talk about interest rate cuts. So there is a good chance that we will be seeing a majority of these central banks pushing the decision on rate cuts further away, and this is expected to strengthen their respective currencies. Of course, the central banks with the highest interest rates are expected to have the strongest currencies, and this includes the US dollar. So for the US, interest rates being at 5.5% makes it a very attractive currency because the bond yields are also significantly high. So as for today, being Monday, the key highlight for the day was Chinese industrial production data. And as I've mentioned, there's a big angle or impact on oil prices. And the next part that will be focused on for the rest of the day will be final core CPI for the Eurozone. So in the previous reading, and this is not last month, but it was earlier this month, where we had the flash CPI, it came in at 3.1%. So the final core CPI is not a major announcement. It's basically a revision of the previous number, and we expect this to come in at 3.1%. So if there is a sudden change in the 3.1% projected, then this could impact the markets. But I don't expect any major changes to be happening in the markets today. So as usual, we know that Monday is often a slow day. We don't have much activity happening in the markets. So if there's one asset that dominates the market, it tends to take the day. And for me, I think this will be the momentum in oil prices. So that being the leading news for the day, we'll take an overview for the week. So, of course, there's a key highlight with what happened over the weekend. So there was a national election in in Russia, where the current president, Vladimir Putin, won the election with 87.8%. So this was a big majority win, 87.8% of the vote. And this was the highest ever result in Russia's post-Soviet history, according to an exit poll by pollster, the Public Opinion Foundation. So now that we know that Putin has won the election, then we don't expect any major changes as pertaining to the Russia-Ukraine war. So even though we have seen an escalation over the last 2 weeks leading to a hit on Russian oil infrastructure, there is a good chance that the escalation of this war might lead to more safe haven hunting. So we might see this week as investors try to understand how the escalation of this war could impact markets, and we could be seeing a rotation towards safety. So this means that we could be seeing out of investors going for gold, going for the US dollar, as well as other assets that are deemed to be much safer in the markets. So as for the overview for the week, I think we have covered a majority of the stuff. The central banks, the dot plots. I don't think there's anything else that is a key highlight. So from tradingeconomics.com, what we are seeing here as the key highlight is that China industrial output, retail sales beat estimates. Then the smaller highlights include European markets set to open flat, mainland Norway economy expands 0.4%. Malaysia exports unexpectedly drop in February. Brent gains on geopolitical risks. China fixed investment rises more than expected. And Singapore Node X unexpectedly edges lower in February. So that's it. That's it for the highlight on the economic calendar. And now we move on to technical analysis. We try to understand the key highlights in the market, how they could be moving this week. And once we cover that, hopefully everyone will approach the week from a more informed perspective. So always remember, if you have any questions related to the presentation, just type that in the Q&A section, and I'll be responding to that as we approach the end of the session. Hello, Brian. Hello, Lamit Buire, and thank you for joining the session. So the first chart that we have on board, this is the UK oil. Clearly, you can see there has been a period of time where oil was ranging or trading sideways with a maximum of around $82.9 and a bottom of around $80.36 per barrel. So this being the 4-hour chart, we took about 3 weeks within this range. Then on the 4th week, we attempted breaking, but we maintained the same sideways momentum, and the real movement has happened last week. So last week, we opened really low at $81.59 per barrel. And as you can see from the opening price of last week, we moved slightly lower before we changed direction and moved higher, and we closed on a high. So this was an almost 4% gain for the week. And now you can see how the week has started this time. So not even backwards momentum, it's just straight up bullish momentum. And I expect this to continue for the rest of the day. So there's still good room that we'll see far more upside in oil prices. So if you zoom out and try to understand where the prices might be headed next, then the candlesticks on the left might make more sense to be focused on. And the key highlight I'm looking at here is this area which was acting as a resistance. There was also this area here. And of course, we have these other areas along this area here. So it seems like a significant resistance area. And now this is the daily chart. So if you move to a much smaller time frame, in this case, the 4-hour chart, then you notice that there's still more room for upside. And there's a good chance that oil prices could rally to at least $87.44 per barrel this week. So if the bullish momentum continues, then this becomes a possibility that oil rallies to $87.443 per barrel this week. So that remains the one asset with the majority momentum today being Monday. Then for the rest of the market, we'll be starting with the dollar index, which ended the week on a high with the biggest rally happening on Thursday and this Friday price action being more of a sideways momentum. So after this big rally on Thursday, Friday moving sideways, as we start the week, we are seeing mixed signals. So the price of the dollar index moved higher and then lower and then up, down. But all in all, if you combine these with the price action we saw on Friday, I would say that the dollar index is still in a range for a sideways momentum. So this is the price action we are seeing in the dollar index, meaning that we don't have a direction yet until the market breaks either of the upper or the lower trend lines. So the upper side being 103.1 and the lower side being around 102.9. So as per now, it's a sideways momentum for the dollar index. So we don't have any major direction, but there is a short-term downside momentum. So as for the USD JPY, this is something we have been covering over the past couple of weeks. And we saw the market consolidating here before the eventual break towards the upper side. So if I was to use the 15-minute chart, you can see the consolidation followed by a break, another consolidation followed by a break. And all in all, what we are seeing is the dollar making a very impressive recovery against the Japanese yen. So after the previous week, we saw a very big drop in the dollar index. Last week was pretty much bullish, and we managed to make some good portion of recovery. And now this week, we have started with some sideways momentum. This is a down, up, down, up, down. More of a sideways momentum. We don't have a major direction yet, but the overall momentum is expected to show us some further upside momentum. And this is especially concerning the fact that there is an expectation that when the FOMC meets this week, there will be a consideration to continue holding interest rates higher for longer and reduce the expected number of rate cuts to 2 from 3 in the previous meeting. And if this happens, then it basically creates bullishness for the dollar. And in this case, we could be seeing the USD JPY currency pair reclaiming the 150 price level. So from the 4-hour chart, this is how it looks like. So a big drop on the previous week. Then last week, some recovery. And of course, this week, we could be seeing the full-scale recovery. So this is more so, especially considering that there is a good chance that the Bank of Japan may not be considering any rate hikes soon. And that will depend on the MPC on the Bank of Japan meeting later this week. So the central bank meeting will be very important and pivotal to the direction of the USD JPY currency pair, with high chances that this momentum could continue to the previous high of around 150.866 yen per dollar. So as for Euro USD, we have a forward. Apologies for that. For Euro USD, we have a 4-hour momentum. So this momentum is happening on a channel, and I would say it has taken 5 weeks to form this channel. So last week, we saw the dollar index strengthening and pushing this pair back down towards the lower trend line. And now this week, it's more of the market attempting to bounce from this area. So remember, it's not guaranteed that the Euro USD will be bouncing from here and headed back towards the previous high. So this is as much a possibility. And there's also the option of the dollar strengthening more than the euro, and we see a breakout towards the lower side. So there is a good chance, or a significant chance, that we could be seeing the Euro USD dropping further back downwards. And this might be indicated following this particular trend line. So for now, it's much easier to focus on the smaller time frame and understand the current price action framework that is shaping up from this. So it's more of a triangle formation with the market moving down and then up, then down and then up, and you don't have a major movement for 2 days. So in this case, there is a good chance we will be seeing a breakout later in the day or even tomorrow. And this could mean that the euro now rallies against the dollar and gets to reclaim last week's high or the previous week's high. But then the option of the market breaking towards the lower side is also a possibility, with this being the key level here. I'm sure we can all see the possibility of the market going further back downwards and the relevance of this price level based on the previous price action, where the level was a major resistance and now turned into a support. So for pound USD, what we are seeing is a period where there was a very strong momentum in the pound against the dollar. We found a major resistance. If I zoom out, you will notice that this resistance was all the way up. We had broken this area here. Then the market changed direction and pulled backwards as the dollar started regaining strength. So after a big rally last week, there was some form of recovery. And now as we start the week, the pound seems like it's starting the week on a strong foot. So I wouldn't say it's a major momentum, because if you go to a much smaller time frame, say the 15 minutes chart, then you notice that we are operating within the parameters of the price action on Friday last week. So here we don't have any major momentum. I would think of this as a flag and then wait for the eventual break. If it breaks to the upper side, then go long. If it breaks to the lower side, go short. But for now, it's still a sideways momentum. So remember what I said, on Mondays, we don't usually have much of a price action. So if one asset takes control, then that tends to be the focus for the day. So for USD CAD, we are still in this bullish momentum channel. And within this channel, it seems like the market is taking a break from the upwards momentum. But then once the dollar picks up, there's a good chance we'll be seeing a continuation of this journey towards the upper trend line. So we had a bounce here 2 weeks ago. I think this was a Friday. Last week, we continued pushing higher, the dollar making a recovery. And this week, there's a potential we could be completing the journey. And the USD CAD looks to retest this previous resistance. So the current swing is this one towards the upper side. So as for gold, we had this period where it was just breaking all-time highs, and it brought out of fear, especially for traders who are trying to short it. Remember, we don't fight the trend. So if there's a very strong trend in a market, we tend to follow that. But then also a very key resource for a trader is understanding when markets are consolidating versus when there's a big impulse. So this was an impulse phase where the price of gold was just moving higher and higher and higher. So we could use this and say it was a flagpole. So if that is our flagpole, then the market is trading within a flag. And following the price action that we saw last week, and this is the last 5 days, then we can see that there is an observed pattern of the market moving up, down, up, down, up, down. And now the market just bounced from the upper trend line, from the lower trend line. And now the expectation for the day is that gold continues moving higher and potentially gets to the upper trend line at around 2168 price level. So I expect gold to stay within the flag up until we have some major news happening in the market, and then that leads to a major breakout. So the key idea here is to trade the breakout once it happens, and the breakout could potentially happen at some point in the week, and maybe even form another leg, and we see another all-time high, or to the lower side, we start seeing gold reversing and taking some steps backwards. So the idea is to track this flag. When it breaks out, then that's when it gives you a signal on the direction it's taking. So as for US equity indices, we have a pretty simple pattern here. So this is the NASDAQ 100 index, two major support areas on the 4-hour chart, and now a third, basically indicating a very strong bounce from here. So potentially we could be seeing the market going to challenge last week's high. So notice that we are now failing to form higher highs. So there's signs of weakness in this market. But as per today, it seems likely that the market will be headed higher. So in the last couple of highs, I would say that this index formed this high followed by this and then this last week, indicating that the index is facing difficulty forming higher highs. And of course, we have seen individual stock tickers moving further downwards, including Amazon, Tesla, and Microsoft. So while Nvidia has continued outperforming in the markets, other stocks are lagging, and this is leading to some form of weakness in the indices. So in this case, we are still on this bullish swing. We haven't broken the trend line yet. So as per Monday's trading activity, seems more likely that the Nasdaq would be making a recovery. As for the Dow Jones, it's a similar thing. But as you can see, we started with some bullish momentum, and now the market is headed back downwards. So a more interesting picture would be if the Dow Jones breaks this trend line and now starts heading lower. That would be major news because the trend line started back in January. And once it's broken, it could be a major signal. And of course, the most recent high did not beat the previous high. So market was unable to form higher highs, leading to the assumption that the equity indices are about to potentially go into a correction. So for the S&P 500, we had a bounce here on Friday. It has continued today, but now we are starting to see some form of weakness in the last 1 hour. But then the idea is to trade the price action around this trend line. So of course, either of two things will happen. Market will bounce from here and continue, or it will break and we will have a major sell-off in the market. So we have already covered Brent oil, and now for European equity indices, I'll be starting with the Euro Stocks 50 cash index. So clearly, we can see that the market is in a consolidation mode. So it's just moving sideways and being unable to form higher highs. Now we are seeing some form of pattern emerging here, with the support being along this line here, and the market attempting to break outside that. So observing this area for a potential breakout would be really nice, with key targets being on the most recent lows around this area here. So potentially, if there's a breakout here, then the market could drop further towards 4,918. So Bitcoin made some big pullback, with the previous high being around 73,000. So after these, we had a huge drop last week. We got to the lower trend line, bounced from here on Friday and earlier today, and now we are seeing some further downside momentum. So it seems like a likely value area. So I'll be observing this area to see the price action, to see if there's a potential for the price bouncing again and heading higher. The fundamentals are still the same. ETFs are still buying more supply than is available. So the French 40 index made a nice break. That was 2 weeks ago. And then last week continued with the rally, but then towards the end of the week started this sideways momentum. And now what we are seeing today is a market that was unable to form higher highs and is now looking to retest a key bottom. So in this case, I would be more focused on this support here. Of course, if I use a smaller time frame, that's how it looks like. And the resistance seems to be following this path here. So a potential break below this area would mean prices now start falling. And from the 1 hour chart, it seems likely that the resistance we had here, the major resistance on this range, might as well serve as the support at 79.76. So that's it for the day. Thank you very much, guys. Let me check on the questions, respond on the questions before we end the sessions. So try to be as fast as I can. So first comment I'm seeing here is from Apollo. BTC appears to be taking nice pullback ahead of the halving event next month. Yes, the pullback is very much welcome. Cheap Bitcoin. So this is happening ahead of the halving. So for those who are new to it, it's a period where the mining rewards are reduced by half, basically meaning that Bitcoin becomes more scarce, and this tends to be bullish in the markets. A good comment from Lamik. Thank you for another educative session. Thank you. I appreciate this. We have a question from Apollo. I feel that central banks' expected actions are already priced in. However, the commentaries are what to look for any dovishness, as hawkishness already ran their clock. So the idea is the dot plots. The Fed usually delivers dot plots where each member in the FOMC policy committee basically gives their projections for interest rates. And in the previous reading, they were expecting 3, down from 5 at the beginning of the year. So if this reduces to 2, then it means that the decision on rate cuts is being pushed further away. And this tends to be bullish for the dollar, because if rates stay higher for longer, then also bond yields tend to stay higher for longer, which is good for bond investors, which basically creates demand for the dollar as well as scarcity. There's a good question from Noel. What type of trader are you, and what do you use support and resistance and trend alone for analysis, or do you use ICT? So I've studied the ICT. I don't think it's relevant. It's not an irrelevant approach to the markets. It's a good approach. But then if you really do understand price action, learn to read your candlesticks, learn to read the support and resistance levels. To be honest, that's all you need. Understand your fundamental analysis, understand the why the markets are moving somewhere, read the price levels to know where and when, and then practice on making accurate entries and exits. Of course, the rest is all about risk management. So I think it's more about digging deeper to understand the why. So if somebody is calling this zone some funny name, you just have to go deeper and understand why the zone is important and why traders focus on it. So another one, when doing my weekly markups, I noted 2023 moves were somehow tepid for major currency pairs. The same appears to might happen this year. Market not trending and appears hard to take swing trades. Yeah, it's kind of true, but it's not. I wouldn't call this an overall judgment of what's happening in the markets right now. I would say we are in this period where the upside seems to have been exhausted. So we are seeing quite a large group of assets being at extreme highs, and this includes the Japanese Nikkei 225 index, SP 500, Nasdaq, Dow Jones, gold, Bitcoin. All of them are trading at close to all-time highs, including USD JPY. So when we have such markets, the potential for further upside is something investors are questioning, and at the same time, the potential for the reversal is also something that investors are investigating. So it's a period of high uncertainty, but a strong potential for swing trades. So if there was a time to be looking for swing trades, I think it would be now, trying to understand the major fundamental shifts happening. And once they happen, then that's when we identify proper swings. So among the five central banks that are reporting interest rate decisions later this week, I would be more focused on one, and that would be the one with a big surprise. Of course, there's an expectation that at least one of the central banks may bring in a big surprise this week, especially the Swiss National Bank, because it has won the battle against inflation. So if it decides to go for a rate cut, that would be a major significant move to weaken the CHF, and it would be a nice, easy trade going for USD CHF as your major anchor pair. What's your view on the Canadian dollar considering oil prices? Strong positive correlation. So for Canadian dollar, I expect to see strong bullish momentum. So as long as oil prices continue being strong, then the Canadian dollar tends to benefit from that. So yes, the Canadian dollar is expected to be reasonably strong today, and it might make sense to try and pair that with a much weaker currency. There's a request on Euro CHF. I don't know how to handle this. I'm trying to pace against time. There's a comment from Geeky FX. The markets are anticipating the JPY rates to be pulled up from negative rates. So this is still lower as compared to the other major economies. Do we anticipate seeing the yen gain against other pairs? So the thing is, there has been a lot of trust in the Japanese yen, and over years it has been used as a safe haven asset. So with low interest rates, it has really weakened the currency, but there is a good chance the currency would start picking up if the Bank of Japan would consider rate hikes. However, the key idea is for a central bank to go for rate hikes. First of all, it reduces its QE program, the quantitative easing program, which basically means printing money. So if you're going for tightening, you start adding more money into the economy. You stop or reduce that, and once you've reduced, then you start using the what we are seeing in the markets today is anticipations that the Bank of Japan may go for rate hikes, but nobody is really expecting that to be happening this week. So the Bank of Japan could announce some positive, let's say, expectation that they will be hiking interest rates later in the year. But as per this week's decision, we don't expect a major change from the negative 0.1%. So nice comment from Francis. Thank you. There's a question on Audi USD. I don't know if we have covered Audi USD. It would be a shame if I missed that one. Where is that? Looking for AUD trading against the US dollar. Yeah, it seems like I missed that one. So let's find the currency pair and try to go through it. And thank you for the suggestion. So AUD USD, we know that the Australian dollar, now being a commodity currency, is also correlated with gold. So what we are seeing here is a currency pair that was very weak against the dollar, strengthened for a week, and then lost in last week's trading. So strengthened here, made some good rally, and then last week pulled back downwards. But all the more we are seeing this as a downwards momentum, and now a change where we have a market that is forming higher highs. So from today's price action, it seems like the market is bottoming from this area. But then judging this from the most recent swings, it seems like the market is taking an overall trajectory, with this being the support and the resistance basically following this path. So we are currently on a downswing. Don't be fooled by the small momentum in early Monday trading. The overall picture seems likely to be headed in this direction. So on the H1 chart, you can see the way the market got to the resistance, kept pulling back downwards. Today, we are still in this sideways momentum. The range hasn't been broken between Friday and Monday. So there seems to be a likelihood that the market eventually continues with this path towards the lower trend line. So, do you prefer Trump or Biden, and how? I always prefer Trump. Trump was much more predictable. His impact on the market was phenomenal. So, for anyone who has been trading in the markets for long, will know how we enjoy trading during Trump times. Yes, sometimes he would tweet something and it would move the market. But then when he focuses on a thing that he really wants to implement, the markets would react to that and it would follow more frequently than not his direction. If he wants something done, it would get done. So, what time frame do you use to mark your zones, and also what time frame do you use to enter the trade and talk about the unseen in the market? So, I always try not to go too high or too low. So, you'll notice that a majority of my charts will be from either 4-hour chart, then moving down to 1 hour, and then a much more focus on the 15 minutes chart, trying to understand the prevailing price action. So you'll notice top bottom analysis, moving from a bigger time frame, understanding a bigger trend, 1 hour, understanding the key market structures, and 15 minutes perhaps for market entry or exit. J Squad, thank you for your comment. Hello everyone in class, we showed up anyway. Thank you. I think I covered the Audi USD question. So the last question I'll be responding to is on one request or under from Lamik, and this is Euro CHF, the Euro against the Swiss franc. So the Euro is one currency that tends to have a very strong correlation with the CHF. So you don't normally see any major swings in the Euro CHF currency pair. It tends to be a slow pair, but when there's a good trend, it tends to create some good momentum. So from here, I would say we are looking at a market that has just formed a continuation pattern. So from the 1 hour chart, I can already see that there is a cup and a handle formation. So beginning from January, let's say at the beginning of the year, around here, this is something we can all agree in, that this has been the prevailing trend, a bullish momentum. Then, now that we know the trend, then we look at the prevailing patterns. And from here, I can see what looks like a cup and a handle, meaning that there is an area that has a very strong resistance around here. So the market made some C-shaped pattern, completing the cup, and then back down and up, completing the handle, and now it's about to break. So in this case, I would be more concerned with this potential break. And once it breaks, it would present a nice opportunity to go for a long position. Of course, there is news from both central banks, the European Central Bank as well as the Swiss National Bank. So I'd be more concerned on how this impacts the price action. But all the more, this is a complete cup and a handle pattern, which is often considered a continuation pattern. So a potential breakout above this area would present an opportunity for going long, but it has not happened yet. So it's more of a wait and see scenario. So thank you very much, everyone. Thank you for your time, and I hope to see you on the next session. I really appreciate you guys joining the session, sharing the links, liking the video. And of course, remember, we have a Bullish Manta podcast. It's available on all major platforms. So if you go to FX Pesa YouTube, you'll notice that we have a new episode talking about electric vehicles, the outlook for the year, and where the markets might be headed later in the week. So at the same time, if you are very new to trading, check out the Novice to Pro series on YouTube. It's a 10-episode course designed to help you transition from a beginner to a pro-level trader. And as usual, if you are trying to open a trading account, check the links below. You'll see a link available for opening a demo account as well as for a live account. Let's get the week together. I hope that all of you guys will have a much peaceful week.